Good morning, everyone. Welcome to this week's Elliott Wave Forex and Cryptocurrency Market Analysis webinar. I hope you all had a wonderful week. It has been a great week in the market. The market has been trending, even if it is August, the month that is supposedly to be slow in terms of the market. You usually expect ranging markets in August, but we've been getting some really great setups. So even this week, almost every trade that we're going to look at, every pair that we're going to let us look at today is almost has a clear direction. So stay glued and don't move an inch because the analysis today will be great, awesome. By that I mean that it is clear. When I say it's great, I mean it's clear direction for almost every pair. Last week was not so clear, but as the week progressed, we could see clear directions in the market. All right, so last week we did an Elliott Wave in 2 minutes. I think I'm going to start with that also this morning. Just to recap for those that have not watched the video. What you should look at when you learn the Elliott Wave theory. Okay, so we'll do that again this week. It doesn't take long. It's just 2 minutes. Elliott Wave in 2 minutes, and you sort of get an idea of what to look at when you look at the Elliott Wave theory. All right. So before we get started, this is what you can also look out for, which is very interesting. On all my videos, you will see that there is timestamps on the description of the video. The video is about 1.5 hours long, so if you don't want to go through the whole video and you're looking for a specific pair, and that is the case for most people, not everybody wants to see every pair. Some are just interested in the Forex pair, some are just interested in the indexes, some in the cryptos. So whichever your preference is, all you have to do is to come in here onto the description and look at the pair that was discussed. You just click on it on the link, and it will take you right where the analysis starts. That works out amazingly well. So this week, somebody even posted a chart on gold that I did in February. They took a screenshot. I'll show that. I'll show that chart on gold and how we analyzed that one. It worked out amazing. So that helps you with that to have a look at how the progress goes in here. So let's start with some trade recap. So I always say that Elliott Wave theory and Forex trading, basically, or any type of market, when you're trading any type of market, you always go with the trend. Okay, and if you find the trend, you know where the direction of the market is. And importantly, with that, you also need to understand the overall direction of the market. That is market correlation. So if you cannot be a good Elliott Waver if you do not understand where the market is going in general. Okay, so there is a couple of trades that I've posted with showing correlated pairs. And I'm going to look at a few of them, just 2 or 3 of them, and just so you can see how you trade. You get the direction, and then you start trading in that direction. So I'm going to start with the one that I did a couple of months back, which was this was gold and US dollar JPY. We're going to look at that one as well. So let's start with Euro and DXY correlation, so you can see how to look at this. So this one was done in November last year. And this is how we looked at the pair. So guys, just give me a second, please. Yes, so this is what we look at. We're back alive. So this is what we look at when you want to get a trend. So I want to show you the correlation. So if you do not have the trend, I don't know what this is about here. Let's just do this. Okay, so if you do not have the correlation between the pairs, the overall correlation and the correlation strength, you cannot be able to trade. So here, when you look at this, let's just get this one with the annotation on, all the labelings on. So this is what you do here. You need to understand the direction. So here I'm only showing the correlation between Euro, US dollar, and the DXY, but there is a correlation between Euro, US dollar, and, say, for example, Audi New Zealand. Even though that correlation may be very minimal, but you need to understand the strength of that correlation. Okay, so that's some of the things that we do as well. So this was done last year. As you can see, this is how this one played out on the 180-hour time frame. So once you know that this is the direction, all you have to do is to trade this one up and trade this one down. Okay, so you trade the Euro US dollar up, and you trade the DXY to the downside. But notice something here in terms of correlation. Here in this piece, you had this going the same direction. You had the DXY going up, you had the you had Euro US dollar going up, you had the DXY going up. What do you think the strength of the correlation will be here? Instead of it being negative, it will have been positive here. Okay, so even if this is inversely correlated, you do find places or times where this correlation is in par. So that's something else you need to understand when you trade the Elliott Wave theory. You cannot trade it in isolation without understanding market correlation. So this is another one for US dollar JPY that I posted, I think, a couple of months back. This was this year. This was also November last year. And you look at the correlation between these two. So once you get this direction and you've got the sequence, all you do is to trade gold up. Okay, in this case, you trade it to the upside, and you trade US dollar JPY to the downside. So notice that this is gold. This was posted in November when gold was still going up. So don't go and look and say gold, but gold is coming down. So just notice that this was November last year. Okay, when gold was still going up, we wanted it to come back up here and to the downside. So you will see the one that I did down this year, that we wanted gold to come down and US dollar JPY to go up. So if you just play this one here quickly, this is the correlation between the two pairs. So all you do here is to trade gold up, it goes up. Okay, you trade US dollar JPY to the downside, it goes down, exactly as we have predicted. Look at this one here. Okay, it touches there, and from there gold has been on this downward cycle as I've shown. Now the latest one that I did, I think it was June this year on the daily on gold JPY. Let's have a look. This is the most recent one. Now you need to understand correlation and how this works. So we were already on the downtrend on gold here. So remember, this is where we, on the first one, the correlation, the first one, we wanted gold to now come down. We wanted the first one that I showed you earlier was when we were here. Sorry, here we wanted it to come back to the level and then come down, and that's how it comes down there. And if you just play this one out here now, so you'll see that whenever I post on TradingView, I don't post those short-term trades that shows you that the market is going to be going up in the next session for a couple of hundred pips. I show you these big moves because that is the trend. So if you had looked at this earlier from June up until now, you would have made from 1,300. Obviously, we started taking this from 1,350 all the way down to 1,000, up to about 11886. That is the previous low on gold. So you see how that plays out. That's all because of correlation. Okay, so that's all about trade recap. I just wanted to show you that if you're looking at the Elliott Wave theory, this is what you need to look at. You cannot look at it in isolation. You look at it holistically in terms of market correlation and the market cycles. All right, so let's quickly talk about the course. There's been a lot of inquiries about the course. People are quite liking what we're doing here on a weekly basis. So the next course starts on there. Let's make sure of the date so I don't give you the wrong date. So the next course starts in September on the 10th. It starts from Monday. It is a 2 weeks course. Okay, so the cost of the course is $529 US. Okay, so even if the course is in September, as soon as you confirm payment for the course, I give you a complete video package of the previous course. So basically, with a lot of questions that I get are people in different time zones looking at the times that I've given on the course poster. They have concern that they may be sleeping during the time, or they may be at work during that time. So it doesn't really matter. It doesn't matter which time zone you are in, because you are going to get a course video package anyway, which means as soon as you join the premium group, you get to start learning immediately. All right, so the $529 US includes access to the premium group for 2 years. So you stay with me for 2 years in the premium group. So what do we do in the premium group? Every single day in the premium group from Monday to Thursday, we look at the market analysis. We do the daily webinars, forecasting and analyzing the market for the following day. So we identify setups, we identify specific entry points, stop areas, and take profit areas. Okay, so that's what we do. So it is more detailed than what we do here on Sunday. So what you're doing here is the front end of a lot of work that is done in the background. So that is the advantage of the premium group. So if I just show you the poster, I think you can just take the screenshot of this. you can see that this picture was taken when I was still young and handsome. Now I'm just handsome. So you can just see here, you can just take a screenshot. So all the course details for the September course are on that poster there. Okay. All right, so let's carry on. So I just wanted to show you that because you're going to be watching the video, that's why I'm not going to take time showing you that. So that's all about the course. So 2 years in the premium group. So what happens after the 2 years? After the 2 years, we can decide if you have learned enough and you are good enough, we can let you stay on as a mentor and assist the new traders that would have been joining us. Or otherwise, you can pay a small fee just to be in the premium group. Okay, so that's how it works. So it is there's positive reviews all around for the course. It is a professional course, well structured. I just don't have time to go through the contents right now, but maybe next time I'll go through the contents. But if you're looking for the contents, just send me an email, or my email will be on the description of the video. So you can send me an email to get more details about the content of the course and what is covered and the times and all that. So all is covered in there. All right. So I think we can get started now. So let's get started with the analysis. So let's just have a look at that one. So I had this chart open on gold. So you can just go and have a look at this one. This is what somebody sent me on Telegram. Let me just move the Telegram screen away so you don't see their name. I just want to put up the screenshot so you can see that the chart itself, only the chart, so you can only see the chart. It seems like I won't be able to show you the chart without the name, but anyway, this is the gold chart that was done in February. You can just go and have a look at this on the timestamp. You'll go and click on gold US dollar on the 25th minute. You'll see that we were analyzing gold here. It's just part of trade recap. So look at this here when we were going up. So I was indicating that gold will eventually, this is not current, guys, this is the video playing. This was done last time, okay? So you can see that I was expecting that this move that happened here will happen here, okay? So look at that. I'm just gonna give you a few more seconds so you can see what happens when you've got the trend. So we were looking for this trend here. That is what I was indicating there currently, right? So you can see that that's the drop that we were expecting up to this level. Do yourself a favor, go and watch the video yourself. Okay, it is there. It is the video for February 12th to the 16th. I'm glad you guys watch the historical videos as well, or you go to the previous videos, because there's also so much to learn from the videos. As much as you can't learn everything, you cannot learn the theory itself. You cannot really be a pro trader just learning from this, depending obviously on your experience. So do watch the videos, it really helps. And like and share the videos as well. That's the only thing you can do for me. Right, so let's get started. I think we've wasted enough time, so let's get into the business of the day. All right, let's have a look now at, I'm gonna stop this now. Let's have a look at the correlation between Euro US dollar and the DXY. Okay. I promised to show you Elliott Wave in 2 minutes, but because now I've just run out of time, go watch last week's video. You'll see in the beginning on the how to trade Elliott Wave in 2 minutes. I think I've even time-stamped it. So now let's look at where we are today. As I said, the market is very clear this week. Almost every pair has a clear direction now. Let's look at the correlation between Euro US dollar and the DXY. So we have been looking at this as a 1, 2, 3, 4, and then 5 move, and that move has now completed. Same thing here, it's 1, 2, 3. If you remember, I've shown you that this was actually a running triangle here. Let's show you that running triangle. So on Euro US dollar, you had a normal triangle A, B, C, D, E, like that before you drop. So on the DXY, you had A, and then you have a B that actually breaks the previous high, C, D, E, before you had a move to the upside. So that is the two triangles that you get on these two pairs. Essentially, it is the same thing. It's just a different type of correction, which is usually the case. Let's just show you the triangle there. You can see we've got a triangle on Euro US dollar that broke for wave 4, and you have the triangle, the running triangle. There is such a thing as a running triangle, guys, so you can just go and read it up if you've got if you're interested in learning that. So let's have a look here and how that is playing out now. So how is this playing out now? You had a 1, 2, 3, 4, 5. Remember, this is an A move. All of this is an A move. So this A move has now completed, and we are now starting a move to the upside. And as much as this keeps on correcting here, as I've indicated last week, we're going to come back almost back to this 200, 201 level, which is the 61% of this, 61% of the whole string here. Okay. Similarly here, you'll be looking for the DXY to come back to this level, which is the 50 to 61% area of this one here. So now I'm going to go to Euro US dollar individually. I'm not going to go to the DXY because it is exact same in the inverse on the two pairs. So it is very clear direction now. All you need to wait for is a correction on both pairs. So this is the daily on Euro US dollar. You can see that we've completed a 1, 2, 3, 4 triangle, 5 here. I'm just label it for those who like the numbers, 1, 2, 3, 4, and then a 5 which completed. Now we've got an impulsive move up that is showing us that now we are now looking to correct, possibly back to that level, or 50 to 61%. You can measure that with a fib if you're interested in that. So we'll be looking for that to keep going. Now if you just look at the 4-hour, let's just go in the 4-hour chart and show the labeling. Can see that that is very clear. We have completed that wave A down there, and it has completed exactly where we wanted it to complete. I think if you go watch the video 3 weeks back, I've indicated that we will get the reversal exactly in this area, even though I expected that maybe we were going to get a wave 5 that does this. So we could not, even though this was like this, it looked like this was too small to be a wave 4, so it looked like we could still have a wave 5 down. But that doesn't matter, because when it plays out, you don't miss it. You can clearly see how that plays out. Okay, so now we are looking at this. So if you remember, and you've been watching these videos, you remember that I labeled the 1, 2, 3, 4, 5 in green, and then A, B, C, D, this A, B, C, from when we were still up here. So you can see how many waves have played out since we came down. Okay, the only difference is that when we got here, I thought this 1, 2, 3 was a complete wave 4, and I was expecting this move. So this move was going to come after a triangle. Nobody could have told you that you're going to get a triangle, but he knew that you're going to come down. So that is why you can always focus the market right, but you need to also understand the timing. So somebody actually said to me this past week, that they're losing money. I mean, they can understand everything I'm doing here during the webinars. And I said to them, yes, you are supposed to understand. I do it so you understand. There are no secrets. The only thing that you do not have is the timing of the market. Okay, you do not have the basic theory, what to look out for when changes happen. You do not necessarily have the strategy. I'm not doing this to confuse you. If I was doing that, then it would be pointless for me to have this webinars. I'm doing it so you can understand, and you are able to understand and follow what I'm doing, because I try to make it as simple as I can, even for people who do not understand the theory itself. So you can at least understand what I'm doing with the webinar. The course is what will give you the detail that will make you a professional trader, if that is what you're interested in. So I'm doing it so you understand. So Euro US dollar, what you need to wait for here, we have broken this top on the 4-hour. So you just need to wait. If you see this doing this is not dropping at this point. This is not dropping at this point. You only need, if you get a correction here above this level here, you know that you're going to keep going up. It is not going to go in a straight line. You're going to get to a point where you're going to get a deeper correction before you get to that level. Okay, so that's all you wait for on Euro US dollar. Similarly, on the DXY, you'll just wait for the inverse. Okay, so let's go through the rest of the pairs. Right, we've done Euro US dollar, DXY, we've done together with that. So pound US dollar, look at pound US dollar on the 240. So pound US dollar as well, same as Euro US dollar. We've made a pulsing move on pound US dollar. Now we've made sort of a pulsing move to the downside. It looks like it's gonna make another correction here for another move to this level. Possibility that this can come drop here. Excuse me, guys. Just give me 1 second. Guys, sorry, I have been muted. I have been muted. Sorry. Let's go back. I can't remember how far was I when I muted. How far was I when I muted? Oh, pound US dollar. Let's go back to pound US dollar. My apologies. Okay, I'm going to try to cut that out of the video. Okay, so we're still looking at a pound US dollar. So pound US dollar similar to euro US dollar. This is what you're looking at here. So pound US dollar, we're looking for this one to come back down here. 1, 2, 3 down. Okay, and then we'll be looking for this one to correct where it is. So this correction should be similar to the correction that we're expecting on euro US dollar, for this to come back up, do this, and then we go. So I'm expecting this correction. So this does not have to, this move down does not have to happen, but I'm expecting it because of the way it has come down. Okay, so it can just go on like this. So here's another alternative that you can find here. This can keep doing this, and if it keeps doing this, then you're going to get this one, 1, 2, 3. Instead, you get this kind of structure. It's still a corrective structure that will take you to the upside. So whatever is going to be happening is a correction for this impulse. So that's what you're going to be looking at here. So what you don't know going forward in terms of the cycle is whether this is going to carry on up to the upside, but I'm expecting that after this three-wave move, we're going to get a continuation to the downside, because this short-term move to the upside, even on the euro US dollar, it is not long-term. It is short-term. It is a short-term move on dollar weakness. All right, so I indicated that euro US dollar has got the exact same move as the pound. So I just went back one. So I said, yeah, I don't expect that this one will come back down for one. I'm expecting a correction here, as I've indicated, for continuation to the upside. Okay, so let's carry on with the rest. Pound, US dollar CAD. US dollar CAD, I think we've indicated, if I just show you the forecast on euro US dollar CAD, you'll see that it is playing out exactly as we forecasted. Okay, so last week Sunday we were here, indicated that we needed to come back down here. It has not reached this level that we wanted it to. So it looks like with the current move here, it may come down with that move. So you can see the structure that it will be making if it does that. Let's clear everything and show the structure that will be happening if that move happens. So if you get any entry point here, or this correction can even happen here to come and retest this low here. Okay, so this level here, I'm expecting that we're going to have a 1, 2, 3 here, 1, 2, 3. I'm expecting a bounce here. Okay, you have a 1, 2, 3 move down. You've got a 1, 2, 3 correction. It's possible that you're going to have 1, 2, 3 correction, making this a big corrective structure here, WXY structure, this big corrective structure like this. So, and if it's big like this, then you know that you are going to the upside. Okay, so it is still very sideways now, not easy to trade, but if you get setups to the downside, you can only take it to this level. Okay, so that's US dollar CAD. US dollar CHF, it can't get clearer than that. I showed you exactly how this was going to play out. Last week, we showed you that we were here on this flag. We had this move to the downside. It's a three-wave move to the downside. And then you've got a three-wave move to the upside here. 1, 2, 3, that plays out like that. And now we're looking for this move to give us another 1, 2, 3. And if I just draw this one properly, the first one, you'll see that you have 3 waves all around. Easy, easy, easy trade. 1, 2, 3, 1, 2, 3, 1, 2, 3. Yesterday, last week, we were here, so we expected that these 3 will complete to this level. So we'll be looking for a reaction at this level, similar to what you're expecting on US dollar CAD. It is very close to this level for a possible bounce to the upside. Okay, so this one is clear. You wait for a reaction and see what happens in this level. If it breaks this level, I'm going to leave it and wait for another setup. Okay, so this one is very clear. Look out for a bounce at this level. It could give you a big irregular flat like that for more upside. Very clear setup. Audi US dollar, very clear as well. So Audi US dollar, let me go to the daily. I think somebody once asked me, I think it was a week or two back, that they wanted to see the daily view on this one. Let's just show that quickly. So Audi US dollar, you've got a simple impulsive move all the way down. This is your low, orthodox low there, and you are getting a 1, 2, 3 wave move to the upside. And in there, you get an AB base pattern there, AB base pattern. After that, you get this move to the downside. Let's switch off everything here. So you get an AB base pattern, and from there, you are getting this move to the downside. How does this move look? It looks like a 3-wave move in the red degree. 1, 2, 3, 1, 2, 3. So you're expecting a little bit of more downside on euro on AUD US dollar based on this structure. You've got the AB base pattern, so this swing, your orthodox highs actually starts there. So you've got a 3-wave move, 1, 2, 3, that needs to complete down there. So very likely that it will end up in that level, AUD US dollar. Okay, so a break of this level will open further downside on AUD US dollar, unless, this is what I said last week, unless you get a deeper structure like this, then you can get a bounce. Otherwise, if you don't get a deeper structure like this and it just comes down straight like that, you're going to cut through that level and it's going to open more downside. And that is very likely based on the structure that Euro US dollar is making. So this current correction on Euro US dollar could be that structure that goes to the upside. And this can be tradable to the upside if you get nice setups as well. And if it does this, then we know that when it gets to this level, it's not going to go all the way, but it's gonna bounce. Okay. All right, so that's what you're going to be looking out for in the lower time frame. Let's see if there's any clear structure, clear setup for AUD US dollar. Let's have a look. Okay, there is no clear structure here. You don't have any setup. You've got a pulsing move to the upside, you've got a pulsing move to the downside, you've got another pulsing move. Only when you start getting a correction here, you know that you could possibly come here or break this level that can give you further downside. But if it doesn't give you a pulsing move to the downside and it starts correcting like this, then you know that this is going to go with the same structure as Euro US dollar. Until that corrective structure for both is completed, then we're going to come down. Okay, so that's AUD US dollar. Look for buy setups, short term, short to medium term. So this will be going with the Euro US dollar bullish setups. New Zealand, same structure. You can see there's no setup there. You've got a pulse up, pulse down, pulse up. Maybe then now it can start correcting. So just be careful when it starts correcting here. Before it gets to this level, it needs to clear that level to confirm that this will give you a 3-wave structure like that. That will then be corrected like that, and then possibly get another 3-wave structure that will give you a 3-wave move, possibly 3 waves up, 3 waves back, 3 waves up, before we complete that correction to the downside. Exactly going exactly the same as the rest of the the US dollar quoted pairs. So showing short-term US dollar weakness. This is only short-term. All right, let's carry on. That's all the US dollar pairs. US dollar ZAR. Let's have a look at US dollar ZAR. We're actually on the buy on US dollar ZAR. Okay. So US dollar ZAR. If I show you the whole structure and the rationale behind this, it's a very interesting structure because this is what it looks like. We initially thought it was going to give us a 3-wave move before it comes down, so we bought this short move. But when it corrected here, we were able to take another trade to the upside, and we could see now that it was actually making a 5-way structure. So initially, nothing would have prepared you for all the move to the upside. So here is what you get here. You've got let's just show that one clearly. You've got a pulsing move up, you've got a correction there. Okay, and then you get another move to the upside, you get this running flat there. After that, you get a textbook expanded 5th wave. Okay, so essentially what you had here was 1, 2, 3, 4, and then a 5. Okay, so when this corrected here, you could see that it was going to be further upside. But what structure were you going to get? Initially, we thought it was correcting to come down, but when it started doing this here, we knew it was going to make 5 waves. And then after that, we could see that this was going to correct for further upside. Okay, so what you didn't know is whether this was going to make a bigger one for further up. Okay, so even if you didn't know, you were going to trade this looking for the C move to the upside, and this move here is another 1, 2, 3, 4, 5, exactly the same degree as this one. It's just that this one happened in 2 days, and this one happened in a couple of days. But essentially, this is an ABC move. What are we expecting now? We're expecting a deeper correction, which means further ZAR weakness against the US dollar. Okay, so we'll be looking for buy setups here. So even though we understand that this is a correction, this is a correction, this is a corrective structure there. Let's just have a look into the lower time frame here. Let's just zoom in a bit and go into the 1 hour. Okay, so this on the 1 hour chart. So this way that one ended, it came down here in 3 waves, came back up in 3 waves, this one up here. So I'm expecting that we're gonna have a correction here, and we're gonna have at least a move to that level. Okay, so we're gonna update this move as we go along. So there's a possibility for this to even come back and retest this level here, give us this move before we get further strength to the upside. So these levels are not projected with the fibs. I'm just indicating the structure here. Okay, right. So that's how this one looks right now. Okay. All right, so that's US dollar ZAR. Let's look at the rest of the pairs. All right, so let's carry on here with the yen pair. So we're gonna start with pound yen. Pound yen. So we've been running this one for the last couple of days from right to the top there. So let's look at how this is playing out now. I'm just gonna go to the lower time frame on this one. On the daily, this is where we shorted this one. When it corrected here, we were buying this move to the upside. This is the daily, so it was 600 pips to the upside. I think if I still have the structure that we were looking at here, I've taken off the arrow down showing the forecast that we did on pound. So we're looking for this to come back down still. Come back down. So are we still gonna come back down? So we look at the structure and see whether we're getting continuation or not. So let's look into the lower time frame in the 4 hour. In the lower time frame, are we getting continuation? So what I'm seeing here on pound yen is that it went up in 5 waves. I'm going to go into the 1 hour so you can see here. So this is how we're going to know whether we're getting continuation to the downside. By the structure that you get in the lower time frame. Fractally, you should get an indication of what's going to happen. So this is what I look at this as. I'm going to show the lower degree first. And this is the lower degree. This is 1, 2, 3, 4, 5 here. This started with a move here like this. You've got this pulsing move, you've got this move here. So there's a possibility that this is making a 4th wave here, one more up and a bigger correction. We don't know how deep that correction is gonna come, and another move to the upside before that correction can actually complete for further downside. Okay, so right now you've got a pulsing move, it needs to be corrected. A correction is gonna come. So that's why you don't need to rush once the market has left you like that. If you did not take the trade like that, you wait for it to give you a correction, because if you remember, Elliott Wave in 2 minutes is a pulse, correction in a pulse, okay? You need to wait for a correction to get the pulse. So you've already got the pulse, all you need to wait for now is wait for this to give you a structure like this one here. Corrective structure, it can even be deeper. So you wait, you be patient, and you wait which one is going to give you. Okay, right. So that's what you wait for on pound. So you wait for a corrective structure, and you can actually trade that corrective structure if it gives you a clear impulse to the downside and a correction. But that doesn't mean it's going to go, but most likely to the sweet spot, which is the 618, before it carries on with the move, and then the correction will be over. Okay, so because this has gone up in 5 waves, we expect that this will be another 5 waves as well. Okay, so a little bit of patience required on pound yen. The rest of the yen pairs, let's have a look at EURJPY. Now we start with US dollar JPY. Okay, US dollar JPY. Okay, I think USDJPY, it's easier to show on the daily so you can see what I've been looking at all along. Okay, so this is what I'm looking at here. I'm looking for this to come back and retest this level, come back down, and then go. Where am I looking for this structure? If you remember, those who've been following this webinar since last year, since 2 years ago, you'll remember that we forecasted exactly that this was going to return here at the 104 area, simply because of this structure. If I switch off here, this is the structure that we looked at. We looked at this as a 1, 2, 3 waves, okay, correction here, and another 1, 2, 3 waves, which is a zigzag in combination with an expanding flat. So that one made you a nice WXY move, and now we're looking for this lower degree here. If you look in this in the lower degree, you had should have shown that one in the lower degree. Let's show it quickly. Show quickly. This is how it looks here. I'm gonna show it again. Is 1, 2, 3, 1, 2, 3. That yellow should be also in the lower degree. There's a reason why I'm doing this in the yellow, okay, because you need to understand the degrees. 1, 2, 3 is not something that we teach here. So you've got that in 3 degrees, like that. So the reason why I'm showing you that is because these 3 waves that's currently happening now could be in the same degree, something like this, 1, 2, 3, that could come back and retest this level here. Okay, why would it retest this level? Why would it retest this level? Because there's a very likelihood that once it touches that level, we're going to be expecting a move to the downside like that. So essentially what you have here is a move, 3-wave move down, a 3-wave move up, and a pulsing move possibly to the downside. It doesn't have to be a pulsing move. It can still be a 3-wave move based on the structure. And then you're going to have this structure as a big W in the higher degree X, Y like that before you get a move to the upside. So that would be a sideways correction. So we're looking to come back to this level depending on the structure that we're getting here. We are getting continuation here. We've made a 3-wave move down. We need to see if we're going to make another 3-wave move to the upside, and then we will make a move to go and retest there. I don't think it's going to happen that quick. So if we look at the 4-hour, let's have a look at the 4-hour and look what this structure is doing. There's another possibility here on the 4-hour. We are on the 4-hour, that the structure that we're looking at, this 3-wave move down that we're looking at, see it has made a 1, 2, 3-wave move down. So this could be a bigger correction that could give you another 3-wave move to the downside. Nothing stops this from giving us this move. Okay, so that will simply mean that this is a double correction. Okay, a double correction, and then we're going to expect a move to the upside. Okay, unless it starts correcting here. If it starts correcting here, then we know that the 3-wave move here is done, and then we're going to be going to retest not this level, but the 119 level, the previous high that we had in this pair on the daily. Okay, so that's what you're going to be looking at, that high over there, not even that one, this one over there. Okay, but we're gonna keep looking at that. So what do we look out for in the week ahead? We look out for a corrective structure here. If you get a corrective structure, you're taking it up. If you get a pulsing move to the downside, you're taking it down short term. Okay, downside will be short term. Okay, so overall move is up. The trend is up. Looking at EURJPY. EURJPY, I'm looking for it to retest the previous high. This one here. Okay, 1, 2, 3, 1, 2, 3, 1. Are we going to get a correction here before we come back up to that level and then further downside? Let's have a look. Okay, so we're going to be looking. So this correlates well with the euro US dollar move that we're expecting to the upside. So if we get a correction here and further upside, then this is going exactly as it should in terms of the structure that we're seeing on euro US dollar, because this is correlated. Okay. So it does not have to give you a deeper correction here, guys. It does not have to. It can just go like this and give you shallow retracements, okay? Because this is a flat correction. It can just keep on going like that. So you need to get small entry points, lower time frame entries on this pair for upside. Okay. Right, so that's EURJPY, US dollar JPY we've done. CHFJPY. So CHFJPY, there's a clear structure here. Clear structure. You see what happened here? You had a diagonal and a correction. Okay, your diagonal 1, 2, 3, 4, 5. It's a motive wave. You have an A move. You have a corrective structure that happened in this regular flat looking kind of move. So what are we looking at here now? If you get a correction here, if this starts correcting here in this level, if you get a lower time correction, you are almost guaranteed 100% 10 lot size trade that you're going to rally into this level only if you get a corrective structure here. Okay, so if you get that corrective structure and you enter next week, you come and buy me a Coke, or you don't have to buy me a Coke, you can just share the videos. Okay, so there's a very likelihood that this move can play out like that. Okay, it is clear A, B, C move. We are now at the level where if we start getting a corrective structure, so you need to have the patience to have this to build up. Okay, so it may look like it's passing to the downside, but sometimes it can just be doing this, it can just be doing that, and you're going to be getting that corrective structure, and you're going to rally to this level. Okay, so this correction will tell you definitely you're going to 115. That's about an 80 pip move, about 100 pip move. Okay, 115 from where you are, it's actually 200 pip move. Okay, from if you get it to this level. So almost guaranteed that this correction, I cannot stress it enough. You need to get this correction. If you get it, you're guaranteed to get a move to the upside. That could be a move that rescues your account. As much as it's a short move, it's an almost definite move. All right. So that's CHFJPY. Looking at AUDJPY. AUDJPY, same. Let's switch off here. So AUDJPY, you get a correction here. Let's do this here quickly. You get a correction here on AUDJPY. You get a correction here on AUDJPY. It's a very short move. This one is short. It's about 80 pips. You are almost guaranteed that you're going to come back to this level. Almost a guaranteed. 9 out of 10 times this works out. Okay, for that move to the downside. So very clear structures that we're finding there. Only if you get what I'm telling you to that you're going to get. So if you don't get a correction, that structure, that whole setup is invalidated. Okay, New Zealand US dollar, we'll be expecting a corrective structure. It has moved up in 5 waves, so you're going to be expecting a correction here. If you get that correction, you're going to be expecting another 5 waves. Same as we're expecting with the other yen pairs. Correction and then upside. CAD. CAD, we've made a 1, 2, 3 move to the upside. It looks like CAD can still come back and retest that level. Okay, so look out for that level. We've made 1, 2, 3 down, 1, 2, could be a 3 up to that level. So look out for a corrective structure also on CAD. If we get a corrective structure here, okay, we could have said this is a 3-wave move and we should expect downside, but I think there's no indication that this is about to reverse at this stage. I'm only seeing corrective structures in the next coming sessions. Okay, so even my indicators are not telling me anything about reversal there. Let's just have a look one more. Nothing about a reversal there. Okay, right, so look out for corrective structure. It can just do this. All right. That's all on the yen pairs. Now let's have a look at the pound pairs. I think we've completed all the yen pairs. Let's look at the pound pairs now. We'll start with pound chief. Okay, pound chief. That's good. So pound chief, this is what you need to wait for here. We are on the downtrend. We've been on the downtrend from right at the top here. Even when we made this correction, we updated that we're going to get downside after that corrective structure. It was a very clear corrective structure. You made a passing move to the downside. Okay, it looks like you've made 1, 2, and you are making a wave 4 here, and you still need to get one more down here. Okay, so minimum target on pound chief is that level. This is the minimum target. No, not that, not even that one, not even that one, further down. Okay, but before that, we're gonna have to get a correction somewhere. So pound, you see, it is further down. It is further down. Okay, so if you look here, the correlation between this pair, this is a three-wave move to the upside. The correlation between this one and pound US dollar, this one is lagging pound US dollar slightly. So let's just have a look at something here. Okay, so around the 61% area, you should expect a reaction here, some kind of a correction, because that's exactly what pound US dollar did. Okay, if I just bring pound US dollar, you'll see that pound US dollar also reacted at the sweet spot. I like to call it the sweet spot because that's where things happen. Okay, so that's pound chief on the left and pound US dollar. I just want to bring it back here. Pound US dollar on the left hand side. Let's switch all these things off here. You see on pound US dollar, you had that big corrective structure. The same one that you have on pound chief, you have that big corrective structure. And even pound chief had the same structure. You see? Okay, now we're coming down in three waves. You're coming down in one, 2, 3 waves. Okay, so these 3 waves still looks incomplete. We may still get one that goes into the 61. This one has reversed into the 61%. Okay, right. So the 61% there. This one has not reached the 61%. I'll be expecting some kind of a reaction at the 61%. Whether this is going to be a corrective structure for further downside, similar to what we're expecting here on pound. Maybe a corrective structure before we come down. So let's see how this one plays out in the next coming sessions. We need to get more information, but around this area, I'm expecting a reaction. This is not just gonna come down slowly. Okay, hold on a second, guys. Right, we're back on live. All right, so that's what you're going to look at to get a bit more information. This one has already reached the 61. This one has not reached it yet. We're still going to expect it to come down to that level. Okay, so let's carry on with the rest of the pound pairs. We've done pound chief. Now let's look at pound CAD. Let's go one chart. Pound CAD. All right. So pound CAD, we're still expecting further downside. So as I've indicated, since we've been here, if you watch the previous videos, you'll see we've been buying pound CAD from here, anticipating that it will break here and reverse. Okay, it went, broke up there, been coming down all along. We even traded this correction together. Okay, so now we are getting this move here. On the daily, it is a corrective move also. So we're still expecting that we're going to get further downside. So this move that is happening here, it looks like it is this move here. So we're going to have the move to the downside before we get any kind of reaction here. So let's have a look in the lower time frame on the 4-hour. On the 4-hour, so what is happening in the 4-hour? In the 4-hour, we've made 3-wave move to the upside. Okay, we've made 1, 2, 3. Are we going to go up with this correction here? Okay, it does not look much of a correction because it looks very impulsive to the downside. So let's have a look. So this could have been, and this could have ended this move to the upside. So if you wanted an entry here, you need to get a structure that gives you something like this. Okay, for this downside, I'm not expecting more downside here unless this breaks this structure here. Okay, so those are the two. This is how you will look at both these alternatives. So we've got 1, 2, 3 up clear. I don't expect this to be the correction for further upside. I'm expecting downside, even though that looks corrective with the naked eye. I'm expecting that the cycle is incomplete and we're going to be coming down to the 88. We're going to be continuing to the 88. 88 of what leg? Let's just show that quickly. The 88 of this leg. And there's a reason why we're looking for the 88 of that leg. And again, you can see that it's called a correlation all around. If I bring out the correlation here, you'll see that this is correlated to pound AUD. Let's bring out pound AUD as well. So you'll see that all these pairs, they don't operate in isolation. Left-hand side pound CAD, right-hand side pound AUD. Very clear structures. So this is what is happening. What we've been doing with pound CAD is copy what is happening this side. So this move on pound AUD has already happened, and this move on pound CAD is happening only now. So we knew that this move on pound AUD has already played out, so that is why we have been shorting pound CAD from May this year. This one dropped last year in June. So we expect this one came down to the 88 and started going up like that. So we'll be expecting this to come down to the 88 as well. That's why I'm still expecting further downside and saying any corrective structure is indication for further downside. Until it gets to the 88, I'll be looking for the structure that does something like this, similar to what pound AUD has done. Okay, so pound AUD here, and we're gonna go to pound AUD just now. So pound CAD, look for downside. Let's look at pound AUD as well. Go back to one chart, and we look at pound AUD. Pound AUD, this is pound CAD. Look out for further downside. Let's just look in the lower time frame on both 4 hour. Okay, so Tammy says pound CHF has reached the weekly, so we should expect reaction in that level. Okay, nice one. Thanks, Tammy. So let's see what we get. Pound CAD. Look out for continuation to the downside or one up before we go. Either way, we're looking for it to come down. Okay, so pound AUD, similar. We're looking for it to give us a move down. So this one looks much more likely for downside than anything else. So you've got this pulsing move here, and if you get a corrective structure, this corrective structure does not have to start there. It can start anywhere. So if you get that corrective structure, that can take you back to that level. Okay, we'll see what happens to that level. I'm expecting that it will come down further from that level without bouncing and giving us that move. So I'm expecting a straight move to the downside on pound AUD. So you need to look out for a corrective structure there. Okay, so that's pound AUD, pound CHF, pound CAD, pound New Zealand. Pound New Zealand. Right, so pound in New Zealand, we're looking for the structure here. Okay, we'll be looking for this one. It has broken this corrective structure. We're looking for it to come down to this level minimum. Okay, all right, so that's pound New Zealand. What are you looking for now? We're looking to take it here. It can even come back to this level. So from this level, we can even get a bounce back to that level. So just have a look at the daily and see what we're gonna get. So we are bearish short term on the pound New Zealand. Let's see if that is short term. All right, so pound New Zealand, we're getting this whole corrective structure here. It's 1, 2, 3, 1, 2, 3, possibly for one up. Yes, there's a possibility for one up and one down before we go to the upside and complete this structure. Okay, so let's just have a look. Short term, what you're going to be looking at on pound New Zealand, this is what you're going to be looking out for. You're going to be looking at, target this one first. That's number one. You can get a bounce there, or you can get a bounce in this level. Okay, so that's what you're going to be looking out for on pound New Zealand. All right, so pound New Zealand, I think that's all the pound pairs. Now we can look at the euro pairs. Have we done all the pound pairs? Let's look at the euros now. We'll start with EURCAD. Let's start with EURCAD. EURCAD correction here, we're looking to target this area. Just be careful with EURCAD because it has broken this low here. And breaking this low means you can get a running flat here. You can get a running flat, which means this can turn anyway without even breaking the top there. So you just need to see the structure that gives you a reversal at anywhere along this string. Right now, you do not have any indication for reversal. So let's have a look. You've got a pulsing move, 5 waves up. You're going to expect another 5 and a 3 and another 5 before we carry on with the move down. So EURCAD, we're expecting very our target is very far. Our target is very far on EURCAD. So this is what we're looking at on EURCAD. We looked at this 1, 2, 3, and this is not in hindsight. Even when it was playing out here, we were buying this for 1,000 pips to this level, and we expected that this will come down at least to come and at that level. Why would we expect it to come to that level? Because if it does that, we're going to have 1, 2, 3 possibly correction here, 1, 2, 3 here before we go up, and that would become a big flat correction there. Okay. So that's what we're going to be expecting on EURCAD. So this can just be a 3-wave move. It can come back up and go. All right. So with a strong euro, I will expect that this will go and break the top before it comes down. Okay, so that's EURCAD, Euro New Zealand, Euro New Zealand, Euro New Zealand. Let's have a look here. Further upside here. This corrective structure that's happening here, Euro New Zealand, I've got a target that is also very far on Euro New Zealand, this level here. All of this is a corrective structure. Okay, so with that move on EURCAD, that can support this to come back and retest this level before we come down. Euro US dollar, we are expecting upside before we come down. Okay, so all the euros are euro pairs are very strong. The euro itself is very strong in the next coming sessions. Short term, we've got a bit of strength on the euro, so we'll be looking for this correction to be done. We'll come and retest the top there and come down. Okay, so that's Euro New Zealand. Let's look at the rest. EURAUD. EURAUD is one of my favorite euro pairs. So EURAUD has made this move to the upside like this. Okay, so we need to understand here now, because we've got a bit of correlation between EURAUD and euro and pound Audi. So in this case, we cannot be the structure is showing us that we can still get further upside on the euro, but pound Audi is showing us something different. So there's a likelihood that while pound Audi is coming down, this could just be correcting here at this level, because that's what happens when the pairs are correlated. They lag and lead each other. Sometimes they wait for each other with the correction. So this could just be correcting at this level before we get that move to the upside, and we get this structure to complete here, and for further upside to go and retest that level. But for now, could just be correction to the downside. Could just be correction to the downside while the pound Audi is coming down. So that's why you cannot forecast the market in isolation. You could see that the pound Audi has made a strong move to the downside, and here the structure is telling you Euro Audi up. So okay, so in that case, what do? You take the one with the clearest structure. So I'm expecting here this will just correct to the downside while the pound Audi completes the down move as well. So let's see how this one plays out. There's conflict here between the structure and the correlation between the pairs. Okay, so that's why you need to have a holistic view of the market. All right, let's have a look at. So that's EURAUD, EURCAD. Have we done EURCAD? We've done EURCAD. We've done EURCAD. EURCHF. EURCHF, same. Got a pulsing move up, correction. A break above this. We're expecting EURCHF. EURCHF can even come back to the 50% of this, as euro US dollar is strong as well. So the euro is all strong, or all round strong. Okay, so we'll be looking for it to go back up to that level. Even though we know that this is a corrective structure, it does not have to go in a straight line. It does not have to go fast either. It can be a very slow move, very tedious to trade as well. Okay, so that's what you're going to be looking at. If we look on the 4-hour, let's have a look on the 4-hour. On the 4-hour, it has already broken this level, this correction here. So a correction here will take it back to that level. Okay, so I think that's all the euro pairs. And the last euro pair we're going to do is euro pound. Euro pound, if we go to the daily, okay, when this, okay, this has, okay, when we, there's a likelihood that this can come back to that level. We can come back to that level. All you need to get here is a correction, something similar to this, something this of this size. If you get a correction of this size here, then you know you can take it back up to that level. Okay, you need to get a corrective structure like that and take it up back to that level. Okay, so that's pound, Europe, that's euro pound. So let's have a look at silver and gold. Silver and gold, let's start with gold. So gold is the one that I showed with the recap. I was showing you how we got this structure to the downside. Okay, I remember there was also a question when I showed, somebody had a question when I saw, I don't know if it was a question or a comment, it was a fair comment. I did this bars pattern for this move here, all right, this move. And I came and projected it here before this move started. Okay, so there's somebody who wanted this move, this bounce up here. Okay, so that move does not have to happen. Why does it not have to happen? Let's switch off everything again. This is the reason why it does not have to happen. Simply because this could be a flat correction. And if this is a flat correction, this is 1, 2, 3, 1, 2, 3. It's a 5, 5, 3, 5 correction. So this here is a 5-wave move. Here is a 3-wave move. So that is why you may not have necessarily have to get this corrective structure that you would have got here. Okay, but structurally that's what we wanted. We wanted it to come down, we wanted it to come down, but you would not have gotten this correction because this is supposed to be a 5-3-5 structure. Okay, so even the labeling there is an error because that's not supposed to be a WXY move. It's supposed to be an ABC move. Okay, if you understand anything about structure, you will know when it is an ABC, when it's a WXY, when it's a 1, 2, 3, 4, 5, when it's a WXYZ. Okay, so that is gold. So gold, we have been saying from right at the top here, any corrective structure, you keep selling it, you keep selling it, keep selling it, all the way down to this level. It has missed this by a few pips. It has not gone to 122. Let's just see, it has missed it by a few people. There's still a possibility that we may still come back down to that level. Let's just switch off everything there and go into the lower time frame. Okay, right now it looks like it's a pulsing move. It's a reversal. It is not confirmed reversal. That could just be a 3-wave move. If we go to the 4-hour, let's go to the 4-hour. Okay. So if we go to the 4-hour on gold, this could just simply be a 3-wave move. And then we keep going down to that level. Okay, I still expect that it will go down to that level. And this upside now is supported by the strength in the euro, but this short-term weakness in the US dollar as well. So expect a corrective structure here that will be broken to the downside for the target in that level that I've just indicated. Let me see if I can indicate that target so we can see it in all in all time frame. So this will be the target. Let's see if I've got it on there. Okay, so that is the target in blue. If we go to the, okay, I think it's not only visible. Let's go. It's only visible in the daily. Let's make sure that it's visible in all time frames. Okay, right, 4-hour. So that will be your target. Very funny, Taxman. Remember, there is a rule of the universe. Everything follows the rule of the universe follows the rule of law. So whichever law it is that the universe follows, all the pairs follow that rule. Okay, remember the Fibonacci lesson that I did a couple of weeks back in one of the videos? The universe is not random. Okay, so is the market as well. So this is your target on gold, 122 here. So whatever is happening here, corrective structure here, whichever way it's going to play out, we're going to wait for it to complete back to this level. Okay. All right, so that's what you need to do on gold. So, and you can even have some buy setups here. You can even have some buy setups here on gold, short term. But I'll be looking for this to come down unless there's a deeper correction for the move that we're getting. If we're getting this 1, 2, 3, and we get a deeper correction here, I'll be interested for a short-term move like that as well. Okay, so that's what you're looking at on gold. Silver has also reversed in exactly the same area where we expected it to reverse. Let's show daily. Remember, structurally silver, we indicated that we wanted it to reverse in that level. Okay, so there's a likelihood that that move up is a corrective structure. And if that is a corrective structure, you'll be coming back to this level here, making this a big 1, 1, 2, 3 wave move. So which means at this level, we'll be scooping up all these silver ounces here. All right. So that's what you look out for, this level. Let's see what is going on in the lower time frame with that correction, whether it is impulsive, as it still looks corrective to me. So give this a little bit of time. So when it completes, even when you sell this, you need to be sell carefully because you'll be looking for this level, the 1350 level. Okay, so let's look out for this corrective structure here. It will eventually come back down here. It will be very interesting if we get to that level. You should put in a lot of positions around that level. Okay, because that is a structural level. We already have this level, and that level may not be a structural level. Okay, so that's what silver looks like. Wait for this corrective structure here. You may get some buy setups along the way. So it will be very interesting to get to 1350 on silver. Let's have a look on the daily. So silver and gold, you can see they are supported. Gold, I just can't pull. I just don't want to pull up gold again. So this level on gold will be this level on silver. We had this level. That is this level on gold is the one that's going to give us this structure like this. Remember, gold is making a three-wave move like this. We are here on gold. So we'll be looking to test this level. This is gold. So this is the level that we'll be looking at on silver as well. So if gold is busy correcting here, silver is correcting in the same place, gold will come down, silver will come down. Okay, so that's what we're going to be looking at. Around this level, it's going to be very interesting. Around the 1350 area for silver, it's going to be very interesting. Okay, so that's silver and gold. Let's look at oil. Let's have a look at oil. But before oil, let's look at a bit more pairs. Let's look at Audi New Zealand. Audi New Zealand. We are actually in the short on Audi New Zealand. Okay, so Audi New Zealand, last week I said this was the forecast last week, right? Now you see how circumstances changes here. So last week I wanted Audi New Zealand to come back to that level. Okay, but we had a passing move to the downside and a correction, and we have traded this. This is a daily. I think it's about 120 pips to the downside. Okay, so does that mean that this focus to the upside has changed? Not necessarily. Okay, we can still get this move to the upside there. So what the forecast is here is that we are looking for a corrective structure to the downside that corrects the whole move. 1, 2, 3. And then a further move to the upside to come and retest that level. Last week, I indicated exactly why I'm looking for that move to go and retest the top. And you can even see that I still have that arrow there, okay? Because there is a clear sequence to the upside, okay? While we are waiting for that move, we don't have to stop trading while we're waiting for a specific move, okay? We were looking for this one to retest. I wanted to retest that level. So this can go back and retest that level before it drops. Okay, so for now, we have been trading this in our group. Let's just have a look here. Dropped a couple of pips before started reversing. Okay, you can see that's how we entered it. If we look on Slack, where do we look? Let's just check here. Just want to check where we actually took this trade on trade setups. just see exactly how we took it. Let's have a look there. There. Okay, so you see when the setup plays out, unlike what I do here, when in the premium group, indicate where you should put your stop. Okay, and also you also need to know when you need to move your trade to break even. So we are only looking for it to give us this three-wave move before we get a reversal, as I'm indicating there. Okay, we made almost 2/3 of the profits. It is now sort of reversing, but I'm still expecting that we're going to get one more down before we actually get that reversal. Okay, so that's how that one is playing out. Okay, you can see that it's still dropping. It's still dropping, so we can still reach our target. So let's keep an eye and see what happens when we get to this level. We may get that as a corrective structure, and then we go to retest that top that we're looking at. That's out in New Zealand. Some of the pairs. Let's see CADCHF, if there's anything to look at there. CADCHF, I just have to go to the daily. So oil looks like it's going to be positive in the next couple of days, so I'll expect CADCHF to be positive as well. At least one more up like that. That's CADCHF. Okay, and also New Zealand CAD. New Zealand CAD, one of the most interesting pairs. Now, see, these CAD pairs don't have impulsive moves. So if you look at New Zealand CAD, I'm still expecting further downside. Even though it looks like it's going up here, I'm expecting this to come back to this level. Okay, so very interesting New Zealand CAD. When you understand New Zealand CAD, you make a lot of money. Okay, so this is the daily. If we go to the 4 hour, okay, if we go to the 4 hour, made 1, 2, 3, one possible to make 1, 2, 3 here, one up, and then we drop to the level that we want. You see, the market does not move in a straight line. You need to anticipate these corrections. It's important to know when it's a pullback or when it's a reversal. Okay, so that's what you're going to be looking out for. You may get one up before you come down on New Zealand CAD. Any other pair that anybody is interested in? Let's look at AUDCAD as well quickly. AUDCAD, also expecting, even though this may push a little bit high, it can just be a three-wave move like that, and then we come down. Okay, possible that we have this one as an expanding flat. This one here is an expanding flat, and then we come back and retest that level. Okay. All right. So I see you guys are asking for more pairs. I don't have enough time to look at all of that. We're already 1 hour, 20 minutes into the time. So we still have to do oil. Let's do oil now. Let's see how, if I do finish in time, I'll do that for you. Otherwise, I can do it off the record. Okay. Let's have a look at oil. Oil, we made a three-wave move down here. Let's just switch off here. You guys can understand the structure from previous videos. Do yourself a favor, watch the previous videos. A, B, C move. Okay, A, B, C, and now you're getting a pulsing move to the upside. So here you've made a 1, 2, 3, 4, 5 move. If you wanted to take oil, you can wait for a correction and target this level. Easy, easy on oil. You don't need to target this level. Okay, wait for this to give you an entry, corrective structure, to go back around that level. Okay. All right, so that's oil, and now we can go into the indices. S&P 500. So the indices, as I indicated, anything that happens that looks like it's downside on the indices will just be simply correction. All right, so even now, this moves to the upside. You still wait for corrective structures and take them and take it up. Okay, so S&P 500, I know these are, okay, let's just get the actual S&P 500 here. S&P 500. It's the same chart though. All right. Right, so we've got this move here. It looks like this single move to the downside is all the correction, not a combination of this, because this structure does not make any sense. We do not have a structure like this in the Elliott wave theory, the so-called contracting flat. Elliott did not talk about a contracting flat. It is not in the Elliott wave theory. Okay, so that's why I'm not looking at that structure as a so-called contracting flat, but rather this will be all the correction, and now we're getting this move to the upside. Okay, we've been looking for this to retest that level and come back for one before you go. But it looks like if it keeps correcting here, if it keeps settling here and correcting here like this, we are going to break this level, similar to what the NASDAQ has done. The NASDAQ has already broken this level, as you would see. So we will be following the NASDAQ structure. Wait for corrective structure here. Any corrective structure that looks something like this, anything like this, anything like this, we're going to be taking it even higher. Look at the NASDAQ. The NASDAQ has already broken that level, which shows that the S&P 500 will also break that level. Let's have a look here. So you see here on the NASDAQ. So the NASDAQ has made this correction. Okay, it is a running flat. So it has already broken here. It has already broken that level. So we expect that the S&P 500 will break and will keep going up. Do we have any indication of a reversal at that stage, at that point? We're starting to get some divergence. We're starting to get some divergence, but it's nothing confirmed at this stage. Okay. The strength to the upside is still very prevalent. So even here on the NASDAQ, corrective structure in the 4-hour, we keep taking it higher. Okay, so that is the NASDAQ. And the Nikkei. Before the Nikkei, let's do the UK 100. So the UK 100, we've made a 3-wave move down, and now we're making another, looks like a 1, 2, 3. You see here, it's just 3 waves. It's 1, 2, 3, 1, 2, 3, 1, 2, 3. Looks like this could be completed. I was expecting one more down here like that, but this could be completed because it looks like we've made a pulsing move here now. We've made a 3-wave move up, and we're making this correction. So that looks like it could have completed. I spoke about one of our traders who was on a long on this one here, and they were struggling, sent me a text saying they needed advice on this one, and I told them this is the structure that I see, and I think this is what I posted before this played out. When we were here, this is what I expected. I expected that we were going to get this correction. This can still do this and go back up, or it can just go from here. Either way. Okay, so that is the advantage of being in a premium group. When you are stranded, you can always ask for assistance. Trading can be very lonely. Okay, I know because I've been in the situation. All right, so that's the structure that you're looking for, this purple WXY structure for upside. All right, that is UK 100. Let's look at, what haven't we looked at? The Nikkei now. Let's look at the Nikkei. Okay, the Nikkei, let's have a look. So the Nikkei is lagging behind. We have not broken that level. So you'll be looking for this one to do this. 1, 2, 3, possible expanding flat or a running flat to come back to that level. Okay, so that's what you're going to be looking at. 1, 2, 3, 1, 2, 3. This could be breaking this level here. And if it breaks, we could be getting this move as an expanding flat. Okay, I'm focusing expanding flat, running flat here because of the strength of the move to the upside. So what do you need to look out for here? You need to look out for continuation. Continuation, I expect that this level will be broken. Look for continuation to at least come and break this level. Okay, so the indices very strong. So that's the Nikkei, and let's look at the Nifty as well, because there's a chart that I'm tracking as well, as you guys know. The Nifty, where's my Nifty here now? Okay, here it is. Nifty is just going up and up. It's just going up and up. You just keep buying Nifty. You just keep buying here. You just keep buying and buying. You're still gonna get a deeper correction like this one. deeper correction like that one. But before you get that, you're gonna need to get this one first. You're gonna get a correction this size first before you get this deep one, So you're still gonna get more upside on Nifty. This is the level that has been broken on the other indices. So this can just correct on top of this one here, but otherwise it is just continuation to the upside. All right, so that's all the indices. Now let's look at the cryptocurrencies. Bitcoin. I'm gonna go daily here and show you my structure on Bitcoin. Very easy. I have not changed it since last couple of weeks. So this is what we're looking at on Bitcoin. Okay, on Bitcoin, I'm simply looking at this current move as a corrective structure. Okay, I'm looking at this structure, this as a corrective structure. One more down, maybe go back and retest this level. Okay, but for now, this looks corrective and we're going to get one more down. Okay, if we come and retest this level, we're dropping. Okay, we can possibly drop to the lowest level here. There's a very likelihood that that will happen. So that is what the chart is telling me. I never argue with the chart. Okay, all right. So I remember 2 years ago, 2015, when the US dollar ZAR was at 18 rands, and I said I'll be looking for it to go to 11 rand in the trading sessions, and we reached 11 rands, and from there, that's when we started the reversal. So if the chart is telling you something, you don't disqualify the chart because of your bias. Okay, that's what the chart is telling me. Unless your analysis is telling you otherwise, then you can follow that. No problem. Okay, so let's look at how this plays out. So remember, it's not about being right or wrong here. It's about making money. If you're right and make money, that's fine. Okay, so that's Bitcoin, looking for this move and then upside. Litecoin, it will be the similar move, looking for that corrective structure. Okay, actually looking for it to come back into the blue box there. Okay, it will have a similar move. So this is a corrective structure, and this is on the daily. So you need to look for the downside on the 1 hour time frame. Okay, so nothing much has changed between this week and last week. You can see that Bitcoin has just made this, it's just continued with the correction here. Same as Litecoin, Ethereum. So Ethereum, also the same thing. Nothing has happened since last week. They just corrected like this. So eventually this will break to the downside. Okay, so even if it's breaking to the downside, it means that it does not mean that it's going all the way down. It may still bounce for one more. So this can even bounce for one and make this running flat here, or even a regular flat. Okay, so either way. All right, so that is Ethereum. And lastly, Ripple. Let's look at Ripple. What happened to my Ripple? Did it move? Okay, there we go. Lastly, Ripple. Okay. So those who are looking for those extra pairs, I'll just spend 2 more minutes to do it for you, but the video would have been stopped. So Ripple is the one that has got a slightly different structure here on the daily. A slight move like this, but either way, that would be a corrective structure for one more down. Okay, so that's what a Ripple looks like. So this Y will be completing in that level. Okay, so I'm just giving you the high level structure because nothing has changed much in the cryptocurrencies between last week's analysis and today. So we're still looking at this one as a running flat, and this one giving us the last move to the downside. We had this move here, we're getting a running flat, we're getting this move to the downside. All right, guys, thank you very much for attending. I hope you enjoyed the video. If you did, please like and share. We'll see you again next week. Thank you very much. Cheers. Bye-bye.